Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Thursday, April 24th. Appliance maker Whirlpool found itself caught up in a sailing maelstrom after its first quarter earnings report, which fell well short of expectations and was replete with a downward revision to full-year guidance. The trouble for Whirlpool wasn't so much on the sales side as it was on the cost side. To wit, sales increased 5% to $4.6 billion, yet earnings from continuing operations dropped 24% to $94 million, or $1.22 per diluted share, compared to $124 million, or $1.55 per diluted share in the prior year period. The consensus estimate for the first quarter was $1.57. Whirlpool's North American business was clearly its weak link. Sales slipped 3% to $2.6 billion, and operating profit plunged to $44 million from $159 million versus last year. It was noted that the U.S. industry shipments declined roughly 9%. The Europe, Latin America, and Asia regions, meanwhile, achieved sales increases of 13%, 24%, and 19% respectively, and each region reported an increase in operating profits. Significantly higher material and oil-related costs, lower industry demand, and increased selling, general, and administrative expenses were called out as factors impacting the North American business in particular. Overall, Whirlpool's SG&A expense increased 17.3% for the period, while the cost of products sold jumped 6.4%. With revenues up just 5% then, it is easy to see why profits were down appreciably. The company said it will work to mitigate these cost challenges by stepping up its productivity initiatives and implementing cost-based price increases. Nevertheless, the efforts are not going to be enough to preserve its original outlook. Whirlpool now expects full-year 2008 earnings from continuing operations to be in the range of $7 to $7.50 per share versus its prior forecast of $8.50 to $9. The significant revision, which was also accompanied by lower industry unit shipment forecasts for the U.S. and Europe, has taken a heavy toll on Whirlpool stock in Thursday's trading. With the near 9% decline in share prices, Whirlpool has pivoted from a position of handily outperforming the broader market to one where it is now underperforming the market. It certainly did not help matters Thursday to hear that new home sales in March dropped 8.5% to a near 17-year low. Whirlpool and companies like it feed off strong housing markets. The fear that the housing sector will stay depressed for an extended period from here, coupled with the cost escalation issues, is expected to keep Whirlpool's stock under wraps for the time being. With economic activity expected to pick up in the U.S. in the back half of the year, however, we look for better reports from Whirlpool down the road. Accordingly, we believe investors should continue to hold the stock of this industry-leading company, which, despite its challenges, expects to generate over $6 per share in free cash flow in 2008. I'm Pat O'Hare for Briefing.com. Thanks for listening.